feel free to, obviously we are going to have a Q&A later on, so feel free to ask us any questions during the presentation or also right at the end. But yeah, thanks for joining us. So I think for today, we basically just want to go through our latest annual results, but obviously, most importantly, is share with everyone who's interested on how we've been going about this whiskey investment initiative in the last 2 years. So we just completed our 2 years of results, and things are going extremely, extremely well. So this is the reason why we're holding some public talks and obviously getting the word out there. You have all met us, but Mark, Neil, and myself are the co-founders together with a fourth partner called Gary. Gary cannot join us today, but we've been running this now for approximately 2 years. Mark has got years of experience in the whiskey industry, and both him and Neil are business partners in a venture called Whiskey Brother in South Africa. Gary also works at Whiskey Brother. Neil is effectively our CEO for Whiskey Brother. I advise the team here in Singapore because the operation is based out of Singapore for a variety of different reasons, predominantly for tax reasons, but there's also a burgeoning Asian whiskey environment right now, and we're seeing quite a lot of investors come in from Asia. So that's one of the main reasons that we've opened shop in Singapore. Now, we released our results around 2 weeks ago, and we've been getting pretty good press. We got quite a few pickups across Yahoo, Business Insider, and a couple of other financial press outlets. We are in talks at the moment with some media magazines, and I think we'll take you through the results a little bit later, but we're very encouraged to be seeing the traction. In fact, last week we held our investor call with our investors that invest in the venture, and shared with them the latest results and the latest insights. So this is, again, as I mentioned, it was originally confidential, the results were released, but now they are coming out publicly. What I must say is also, please, this is, standard safe harbor agreement. Anything that we do disclose in this presentation is to the best of our knowledge. We are not giving any investment advice per se, and we are just sharing our experience, as much of the experience that we currently have. So during the presentation, we've essentially got around 50 minutes worth of presentations, a little bit less, maybe 45 minutes. I'll hand it over to Neil and Mark, who will really be talking us through whiskey as a market in its entirety, the trends that we are seeing at the moment, and what we're seeing in the industry, and also brands that you may want to invest in on yourself. And then Neil will take us through SVC, how that's been going, and how the collective has been achieving the results that we've seen. And then we'll also go into our portfolio and what we actually hold in the portfolio. And then we do have some time for Q&A. Obviously, any questions that you feel free that you would like to ask live, you can during the presentation. Otherwise, we also have a few questions from people that sent in over the last week. So thank you so much again, and I'll hand it over to Mark, who can tell us about the whiskey industry in general.
Thanks, Marek. I think I'll put the screens on just in case the slides maybe get a little static. At least there's some movement here in the background. Neil and myself are dialing in from Johannesburg, and so yeah, thank you for the introduction, Marek, and to our audience, thank you for joining us. I think what's great about this is that generally, our existing investor base is spread across the globe, and so it's always nice to do a conference call because we can we're not constrained by borders. And what's always interesting is the various time zones. For us here, it's afternoon, maybe morning, maybe nighttime. But yeah, thank you for joining us. I guess good morning, good afternoon, good night. As Mary said, so this is kind of the brief for this afternoon. Mary also mentioned we had our investor call with we had our call with our investors last week, which went really well. And we're doing multiple open sessions just to touch a broader audience if anyone's interested, either just to get a general understanding of kind of the whiskey market and investing in whiskey, or specifically, with regards to what we offer at SVC. So this is one of many we plan to do, and thank you for joining us today. Depending on your I guess level of knowledge when it comes to whiskey, what we find is obviously many whiskey drinkers out there, many collectors out there, and what we're starting to see is many investors out there. And what I want to do is kind of, before Neil talks us through SVC and what we offer, just to take a step back, because I think, 2-3 years ago, if you were talking about investing in whiskey, depending on the circle you were in, it was something that just seemed so foreign. Oh, you can invest in whiskey, or how would you, or why would you? So to take a step back, as slightly my introduction, is that when it comes to investments of passion, which is where we see whiskey lying, something, and you can see behind me, my personal collection, whiskey is an absolute passion of mine. I spend almost every waking minute talking whiskey, reading whiskey, learning, sharing, drinking whiskey. And it's the same for many other, investments of passion. And so, I have it's kind of, hopefully, depending on your awareness or not, what I want to try and do with just the next slide or two is to make it seem obvious as to, well, why can't you invest in whiskey? Why whiskey, can be an investment of passion. Because if you first hear about it, you think, well, why? I mean, whiskey's everywhere. I can go to the shop, I can buy whiskey. I can go to a bar, I can buy whiskey. I can drink whiskey. Why would I invest in whiskey? But it's just like anything, that in terms of, items of passion, cars being, a great example. There's, millions of cars on the road. Most of them are not worth investing in. Most of them are not worth collecting. They're practical, they're utilitarian, they have a purpose. We buy them, we drive them. However, as you migrate up the offering when it comes to vehicles, you go from just your average, cheap I'll say rental car, but just cheap runaround car, to items like this Ferrari 1962 GTO, which on record is the most expensive most expensive car ever sold on auction. And I think some people might see this and say, well, that is a lot for a car, but I do know cars go for a lot because there are collectors, there are gearheads, they're famous actors and I guess personalities that have impressive garages, and we see this all the time. We've become accustomed to the idea that certain cars will do well. It isn't every car. Certain factors come together: the badge, the brand, the engineer, the dynamics of the car, and we've kind of we accept that certain cars can do incredible things when it comes to investing and values. This Ferrari is just the kind of the top of that example. A few others that we expect, right? We know people can invest in wines. We know in auction that they can do ridiculous amounts of, they can achieve eye-watering values. This 1945 is considered the most expensive whiskey ever sold in auction. Wine, my apologies. I always have whiskey on the mind. To the left, this is the most expensive item of jewelry ever sold in auction. And you get the point. I mean, even to the right, which is a new example for us, this is the most expensive stamp ever sold. I think it was about 3-4 years ago, valued at 9.5 million when it sold in auction. And although maybe the stamp is surprising, the car won't be, the wine won't be, the jewelry most likely won't be, the coin might not be. But when it comes to whiskey, and 2 years ago, this sold at a record price on a Sotheby's auction. And at the time, everyone thought, wow, that's almost ridiculous. How can whiskey be so expensive? Well, by the same train of thought, how can a car be so expensive? How can a coin be so expensive? How can a stamp be so expensive? And our approach to this is very much, from the numbers we've seen, but also from having an understanding into the market. So as whiskey drinkers, first and foremost, then as collectors, then as investors ourselves. And Neil will take you a little bit through our backstory in terms of SVC. But the thinking very much here is that, there are plenty of whiskeys out there that are hard to come by, very desirable. And what's started happening in the last few years, and here's 6 years of data so far, is the secondary auction, the secondary market value for whiskeys. So what you find is, yes, we go to the store, we buy some whiskeys, we drink them. If it's a special whiskey or something quite pricey, maybe we keep it for a special occasion, or maybe we buy something that we know we can't get again. A limited release, you have to be in the right time, the right place to buy the whiskey, and those are the type of bottles that then start getting away from just kind of utilitarian value, commercial value. It's not just for drinking. It's not really even just for collecting and looking nice on your back bar. It's actually for, not necessarily for investing, but they are so scarce, they are so hard to come by that they do present good investment potential. These numbers here that I'm sharing with you are from Rare Whiskey 101, and it is the secondary auction market in the UK alone. And what we've seen over the last several years is this explosion of the secondary market with regards to whiskey, primarily driven in the UK by online auctions, but in-person physical auctions across the globe from Hong Kong, Singapore, New York, and whereas historically there was plenty of fine wine auctions, and you would in the last few years you've seen this inclusion of whiskey, and then actually almost exclusive whiskey auctions that have started happening over the last few years. The first graph is the number of bottles sold at auction in the UK on the secondary market, and it just, I think it paints a clear picture as to the growth in this section of the market, and we specifically refer to the secondary market because when it comes to retail, in the last few years, there are bottles that are packaged and presented by the brands, specifically with very big price tags that are there to attract collectors. They don't necessarily hold investment value. They may not. It all depends on the intrinsics of the bottle. But the best way to value a bottle, and what we do on a monthly basis when it comes to our reporting, is how is that bottle tracking on the open market, which is very much the secondary auction market. Because all of these are fairly scarce, they're limited releases. You may or may not have access to them at retail. Generally, you don't. Again, you have to be at the right place at the right time. You have to have direct access to the distillery or to the whiskey producer, and that bottle will be on the open market in terms of official primary retail for sometimes a matter of seconds before it's sold out. And then what you have is collectors and investors across the world who covered that brand or that release or want it, now are trying to search it. And the only way they can generally find those bottles now is in the secondary market. And that for us it provides a really good data point for actually valuing the bottles, because at any point in time, that's what we believe the market's willing to pay for that bottle. The second
Can you give us an example of some of the bottles that are being sold on the secondary market? Are there any like brands or distilleries that we might recognize?
Yes, absolutely. You would recognize, well, obviously, it depends on your kind of whiskey knowledge. But the truth is, there is no brand that is not trading on a monthly basis in the UK on the secondary market. So I mean, the bottles sold. So this is from 2019. 143,000 bottles sold on UK auction in 1 year. So I mean, you're looking at over 10,000 bottles a year trading. 10,000 bottles a month trading. And so it covers just general stuff. I mean, the auctions offer quite it's such a broad spectrum that there are everyday bottles there that you can pick up just to drink at home, not a problem. But there are also all the limited releases that then get traded on auction. So it's practically across the broad spectrum of distilleries in Scotland, and that's in addition then
US, Ireland.
Exactly. Japan, all the traditional whiskey producing countries, as well as in all the new world whiskey producing countries like Taiwan, like India, like South Africa as well. We have a brief inventory list to share. We don't disclose everything, except to our current investors, but we do have a highlights reel, so to speak. And we're happy to give a little bit of insight there as well if you'd like to know more specifics. But the last graph here, just to wrap up the slide, average bottle value on the secondary auction market in the UK, and you can see what we've seen is the transition from 10 years ago, just general individuals, drinkers trying to pick up a cheap bottle for drinking, to now it being a marketplace for investors and collectors who are yes, drinkers are absolutely still involved. Hopefully you tick all three boxes. If you only want to invest in whiskey and you're not actually that interested in the products, etc., that's fine. But we do, I think, like any investment, we very much encourage our investors to have some knowledge. derive a great appreciation for what we offer if you actually know the brands or have some interest or curiosity when it comes to whiskey. This slide is from the Knight Frank Wealth Report 2020, and it just in terms of they refer to it as a decade of passion, but when it comes to luxury investments and investments of passion, just how how rare whiskey, and they only included rare whiskey into the index 2 years ago, and when they did it up, it boiled to number one immediately by quite a large margin, as you can see. Historically, the Wealth Report included other investments of passion, and you can see multiple ones here. Prior to rare whiskey, coins and cars were number 1 and 2, and then once they included whiskey, it absolutely shot to number 1 by a fair margin. With over the last 10 years, 563% increase in value for a specific portfolio of whiskies as rare, as defined by rare whiskey. Just in terms of trends we're seeing today. So again, I mean, because what we offer is so niche and requires specialized knowledge, whiskey is what we live and breathe every day. And it's just a nice opportunity, speaking to investors or potential investors and painting a bit of a picture as to what actually happens in the industry. If you're not actively involved in the industry, I think whiskey is often seen as maybe because it's such an old industry and whiskey takes a while to make, it's maybe a slower moving category of drink, and it's absolutely not the case. There isn't a weekly, there isn't a week that goes by that there isn't new news, new releases, new distilleries opening up, movements from master distillers across different producers hitting the news. So in terms of trends we're seeing today, and this does change, this changes every few months, definitely every year or so. But in general, over the last 5 years, we've seen an explosion of interest in whiskey, both just from a consumption point of view, from a production point of view, and then kind of, I think, added onto that, you can't have those two without then having an increased interest in, collectors and then investors as well. 5 years ago, whiskey never made the headlines with regards to, stories about eye-watering prices and brands being sold off for, really, high amounts of money. And these days it's commonplace. If you're reading, Financial Times or Forbes, whatever it may be, they all now have spirits writers, and in particular, they have whiskey writers, which they did not have a few years ago. So I think it really paints a picture as to kind of the emergence of this industry into the mainstream, and not just being about whiskey drinkers anymore, but these other individuals who are attracted to them for not specifically drinking purposes, collections, trading, investors, etc. So in terms of trends we're seeing today, new distilleries, and that isn't such a new trend. By that specifically, I mean the opening and the coming to market of new brands. So of the last 5 years, globally, there's almost been 100 new distilleries that have been in production, and 30 of those in Scotland, 30 of those in Ireland, 20 in Japan. And what we're actually starting to see now is that over the last 5 years, these new distilleries have been built, they're operating, and we're actually at the point now where a lot of them are coming to market. So it's just an exciting time. Not all of them, I don't expect all of them to do really well. It's interesting to see the teams behind it, the ethos, the values, what they're trying to accomplish with the distillery. But it really, if you're interested in whiskey, it's a really, busy time with the new producers almost every month releasing their inaugural releases. Some of those, in terms of SVC, we hold in the fund already. But it's exciting to see what will become of all those new brands. Independent bottlers, if you're not familiar with independent bottlers, they're third parties that buy whiskey from producers and bottle it under their own label. I think this goes hand in hand with the kind of official distillery releases. We're seeing a lot more independent bottlers come to market. And in addition, direct to consumers, particularly last year with the inability to travel, what we've seen is a lot of the distilleries then decide, well, they can go direct to the consumers. So you're seeing a lot more online events. You're seeing a lot more direct to consumer sales. So the distilleries, generally, if you go to a distillery in Scotland, they will have a distillery only release. That kind of rewards the traveler for coming all that way to be able to pick up something special. Those generally hold good value because they're not easily acquirable. They're not obtainable very easily. And so what we're seeing now is that the distilleries still want to release these special releases, but no one's coming to the distillery. So now they open them up to online sales. There's still limited releases. You still, only have kind of a limited opportunity to purchase them. But as opposed to just sitting back, and what we've definitely seen over the last year is, I think, welcoming more individuals that have been home to the whiskey industry by being able to, reach out directly to them with online events, offer them cool bottles, and actually engage people. And then just finally, experimentation. So with all these new distilleries coming up and opening the doors, producing liquid, it's quite a saturated market to some degree, and you can't just do the same old thing and expect to get people's attention. So we're seeing a lot more of experimentation with the types of casks that are being used, with the different types of grains that are being used. It was just 2 weeks ago, a London distillery released a rye whiskey, which is traditionally considered an American style. There's no reason they can't do it. It's been met with quite positive reviews, but it's the first time an English producer has made a whiskey using rye on record. And so I'm yet to try it. My bottle's in the post. But whether it's good or bad, it's just an exciting time to have access to all this experimentation, and then paying attention to more geeky things like yeast as well, distillation, runs, temperatures, etc. So it's an exciting time to be a drinker as well. What we're seeing lots of, and if you're on LinkedIn or you're just kind of reading the news on a weekly basis, you will most likely have been approached already by a cask investment business. We're seeing a lot of this at the moment. We differentiate ourselves quite strongly from a cask investment opportunity. Yes, we do hold some casks, but we have a channel to market. But because of the high demand in whiskey in general, what we're seeing is a lot of trading in casks as well. If you're interested in it, we're happy to give you our advice. We don't necessarily offer it. We do think there are caveats to it. On our website, we have a write-up about cask versus bottle investments, but it definitely is kind of a current day trend. And then finally is with all this kind of fanfare and whiskey becoming I'm going to say a household name, but just incredibly popular and mainstream to some degree, you're seeing the reopening of lost distilleries. So these are distilleries that had great reputations, but due to bad times in the 80s or even in the 90s, closed their doors. Since then, the liquid that has been maturing in cask and has been bottled has been released, and nowadays considered some of the best liquid or the best examples of those areas. And this is actually the year that the 3 distilleries in particular in Scotland, which are all very highly rated, are actually being released. We'll start production this year. For all these brands, in terms of our portfolio, we hold some of the historic releases from these distilleries. So it's something that we're watching closely, but it is also an exciting time if you're a whiskey drinker to see these distilleries, long lost historically, now come back to light. In terms of our upcoming brands, and I won't go through these too much in detail, but again, you're talking about dozens of new distilleries opening up in multiple countries, and out of those, it's just there are some that are already pulling away from the pack and differentiating themselves, either because of their experimentation or because of their whiskey team on board or the back end that they have. And so this is just a handful. Not all of these distilleries are actually open and running yet. Some of them are, some of them aren't. Rassi, as an example, just released their first single malt ever approximately 6 months ago. Milk and Honey is an Israeli distillery, first distillery in Israel to release a single malt. Last year, they came to market with their product. And then in a slightly separate category of still upcoming brands, but already proven, even though they're new, very short histories here for these 5 distilleries, but all of them already highly sought after, limited releases. As soon as they become available, they are literally sold out within minutes globally. People then desperately want them. So if you want them and you didn't get them at launch, you then go to the markets, you go to the auction houses, and along with 10,000 other people, you are then trying to bid to secure your bottle. Just before I hand over to Neil, so hopefully I've set a bit of a scene as to what, when it comes to whiskey as we see it and what we are slightly more involved in. Yes, we drink your standard whiskeys on a daily basis, But when it comes to what we offer and what we're looking at, it's all about scarcity. It's all about the teams behind it, the quality of liquid, and bottles that are not easily acquirable. Our portfolio, as it currently stands, is not made of bottles that you can just go to your specialized whiskey retailer and pick up. And from the start, we've always held the hypothesis that whiskey is less volatile than other investments, even though from a maybe an uninformed position, it would seem like a volatile investment. We've always held firm that it is not heavily volatile, and that based on our own experience, and now after 2 years of trading as SVC, the returns we believe is obtainable investing in the right kind of whiskies. Neil will take you through some of those results, but when it comes to kind of the risk and the return of the asset class, this is where we pegged it at 2.5, 3 years ago when we started looking at this, and thankfully so far our hypothesis has held correct, we're very happy with our returns. And with that, I shall hand you over to Neil.
Hi, everybody. Thanks for joining. We're going to have a little bit of a story, and story is always good to explain, I guess, how we came to be and how we got to where we are currently. So 3 years ago, just over 3 years ago, myself and Mark decided to take a trip to Japan on a whiskey fact-finding mission, if you will. Obviously, we drank a ton of Japanese whiskey. We owned a lot of Japanese whiskey, but we'd never been. So we felt it was important to go and have a look around. And it just so happened that our good friend Marek, who I've known for almost my entire life, happened to be in Tokyo at the exact same time we were popping over for a visit. And of course, one thing led to another, and we have a few drinks at a teppanyaki joint. And 3 hours later, I'm telling stories about in my previous life, I worked for an asset manager, and I often used to joke with my boss that my whiskey collection completely outperformed every single fund that they managed. He used to just laugh at me, really. And of course, that piqued Marek's interest as an intrepid investor that he is. And we started to sort of do the napkin numbers on how possibly a whiskey fund could potentially work, where it should be based and why, where we would keep the product. A short 6 months later, we sort of had worked out all the legals, and we started buying whiskey essentially with our own money, and sort of ran a 6-month experiment. Myself and Mark obviously had been collecting whiskey for 10 years at the time, so we weren't too worried about it from an investment point of view. But I guess it was important to prove to Marek that these bottles were actually increasing in value at the auction, and that's essentially how it came about. A short 2 years later, the opportunity itself, rare and collectible whiskey, of course, has increased massively over the last 10 years. You're looking at 560%. Prices in the last 12 months, up 35%. Massive demand, obviously driven by China and India. There's quite a few things we could, go into detail there, but, if you're interested, you can ask questions at the end. From a supplier point of view, there's sort of 3 major producers. Of course, you've got Scotland, you've got Ireland, you've got Japan. And if I'm honest, you actually have a 4th, because the US actually has a couple of epic distilleries that are absolutely worth investing in, assuming you get access to the product. Globally, you're looking at 180 odd distilleries across those markets. Of course, much like cars, that Mark touched on earlier, and not to offend any car, owners of brands, there are lots of collectible Toyotas, but, almost every Ferrari is collectible, so again, brand absolutely matters. And of course, what's under the hood matters as well. The actual liquid itself matters, and the limited releases, that matters. Supply and demand is just simple economics. If the release is, less than 200 bottles for the whole world, the reality is there's absolutely more than 200 collectors globally, almost of any malt that touches the market. So there's going to be big demand for it. Upward price pressure, distilleries, under supply crunch at the moment. I think globally there's obviously been a move towards whiskey as a whole. There's been massive expansions at distilleries like Macallan, massive expansions at Glenlivet, and Diageo themselves have built new distilleries to produce, blending malts so that they can, use the malt that they're producing at their more niche distilleries and fetch higher returns on that product. Let me hit the next one more. The investment proposition in a nutshell, of course, we are obviously sourcing our own rare whiskies for investment purposes. We buy off collectors, we buy on auction, and we buy at retail or trade, depending on who we have access to. The team itself, obviously, more than 15 years experience between myself, Mark, and Gary. It's probably closer to 20 years now, to be honest. The use of leverage there, don't read too much into the word leverage. That's Marek's favorite marketing tool. Leverage obviously might imply that we're going into debt to buy assets. We aren't doing that. The word leverage here is simply to leverage the position that we could potentially gain within a market on specific bottles. If there are 200 bottles in a market and we own 180 of them, we essentially control the price, which is a big deal. From a structure point of view, SVC is essentially set up, it's a company, and as an investor, you would buy in and you would be a pref shareholder. Straightforward, simple. There's no capital gains, obviously, on this. Dividends in Singapore, obviously, is not taxed. We definitely don't claim to be tax experts, so depending on where you live, you might need to get in touch with your accountant just to make sure you aren't liable for any tax when you draw out your earnings. Of course, if you draw your earnings out in whiskey, well, you might also have to pay duty if you get it shipped to wherever you live in the world. Second year returns and performance since inception. So we're looking at 37.91% for 2 years. Our second year was slightly down on first year. I think we did just over 15% in year 2. I think again, though, in an incredibly tough market, we were very, very happy with that. I think again, the volatility of whiskey, was amazing. I mean, there was almost no volatility. I mean, we just kept on ticking up where the rest of the world markets were crashing left, right, and center this time last year. Whiskey just kept trucking along. From a split point of view, we've got 708 bottles currently in the fund, and we've got 45 casks. Again, there's a couple of reasons for this. And excuse the pun, it's a liquidity thing. The reality is it's much harder to move a cask that might have 500 bottles in it than it is to sell a single bottle on auction. Also, it's tougher to get your full value for the cask, because the reality is the only way you extract full value from the cask is if you actually put it into a bottle and you have a route to market. If you don't have that, you're not going to get the full value of your cask investment. Just a little bit more on what I touched on already. You can obviously see there from a return point of view, whiskey's been incredibly stable over the last 2 years. Gold obviously last year jumped up massively. I mean, you can see it's almost just a complete polar opposite to the markets themselves, the S&P 500, etc., which obviously took a hammering. I think it definitely proves the hypothesis of low volatility investment and fairly safe returns. With regards to the holdings, just some golden bottles in the fund itself. The Glengrant 50-year-old, which Dennis Malcolm himself laid down some 55 odd years ago and then bottled some 50 years later. Myself and Mark were lucky enough to try it at an event a couple of years ago. Absolutely epic, really special bottle. Glenury Royal, of course, 50-year-old. That's a closed distillery, very hard to come by. And of course, Macallan, one of the shining lights from a whiskey investment point of view. 1946 is considered by many one of the best years that Macallan laid whiskey down to rest. And of course, 52-year-old, massive. Lagavulin, obviously, again, a big distillery in Diageo's crown. If anything, it's probably the crown jewel in their existing distilleries. 37-year-old was the oldest bottle that they'd ever released some years ago. The Yamazaki 35-year-old, the third oldest bottle ever to be released from Yamazaki back in 2002. Just an insane bottle. It was only some 200 bottles released some 19 years ago. So you can imagine, just the demand for something like that. Of course, Hanyu, closed distillery from Japan. If you don't know much about the card series, Queen of Diamonds is one of the cards in the set. It fetches over £20,000 on auction at the moment. Anything from the Japanese distilleries at the moment that comes in form of single cask, much like Nika, is highly sought after. They really are producing a lot more blends, which are, frankly, fetching eye-watering figures for whiskey that perhaps isn't necessarily worth the money. So single cask, very, very sought after. The AHH, a closed US distillery, the 1974 vintage is a 16-year-old, will often fetch more than £2,000 on auction. Similarly with the Heaven Hill, and of course Dornoch, new distillery. I'll pass over to Mark. He can probably tell you a bit more about the boys at Dornoch.
So just micro distilleries. It's currently the smallest in Scotland, run by two brothers that have overseen a whiskey bar as part of their parents' hotel for the last several years, firm belief in what style of whiskey they want to make. Incredibly high quality, low volume. Last year was probably just about 6 months ago that they released their first inaugural release. Those were two initial investors into their distillery. Fortunately, in terms of SVC, we were able to secure not only one, I won't say how many, but Dornoch octaves, which are 50-liter casks. It's early days, but these are definitely sound investments. Very cool and exciting project, and we expect really positive things to come in the next few years. So that very much wraps it up from a presentation point of view. We're very happy to take any questions. Thomas, you're our exclusive attendee right now. Thank you for your attention and time. It does mean that you have all the time in the world as well, and you're welcome to ask us whatever you like. That's very much hopefully a good oversight and introduction to SVC and what we offer.
Thanks, Mark. Neil, sorry, Thomas, go ahead. Shoot if you have any questions.
No, I was invited to ask, so I got a few ideas that may help just for the whole video here. I was wondering if you could elaborate a bit more on how your holdings are calculated. I understand that you track the secondary auction prices, and is that's the primary means of calculating your holdings on any time period, monthly basis, etc.
We essentially aggregate the auction prices on a monthly basis. So if you're familiar with a unit trust or a sort of managed investment where you're buying into, say, a holding of, even if it's stocks, that would be priced on a daily basis as soon as the stock market closes. Obviously, because it's, whiskey auctions, we track 5 auctions globally on a monthly basis. And then essentially there's a line drawn in the sand saying, cool, this is what the 700 odd bottles did on auction last month, and this is what they're worth. And then the price is essentially set for the next 29 days until we revalue the bottles.
Okay, thank you. And since I have the floor, I have a follow-up question. And this has more to do with sort of a general view of whiskey. I want to speak to the whiskey experts here, because of course the value of these bottles and these casks has to do with their scarcity. And this is just more of a general long-term question. If you've been following the whiskey world, there's a lot of developments, new technology, new ways of distilling, new ways of, using pressure and heat and all sorts of things to create very high quality whiskeys in shorter periods of time, within days or weeks. And I was wondering if you could just speak a little bit about possible disruptions to the whiskey market long term, maybe not in the next couple of years, but who knows, in 5 years time. Would that have any effect on the holdings or in your views towards whiskey as an investment?
Yes, so very good question, Thomas, and yeah, you're right. It's something that, again, every few months there's some headline that talks about speeding up maturation or producing more whiskey for less, whatever it may be. And at the moment, to be honest, when I see these headlines, I actually just get a bit of a chuckle. They're humorous. I see those and it's clickbait. But with that being said, obviously, if you to some degree, yes, I think we do have to pay attention to what's happening on the outskirts. I think for us, and the comfort I take and the comfort I would give to the investors and anyone considering playing in this market is that whiskey is not a new drink. Whiskey has been around for thousands of years, and with that you have regulatory bodies globally that control the definitions of whiskey, how whiskey needs to be produced. There are minimum maturation times. So, yes, could some of these things change in time in terms of these definitions and the minimum requirements? Yes, I mean, they have historically changed. We'd be fools to think that they couldn't possibly change again in the future. However, there is so much, already equity at stake. There's so much reputation. There is so much history. And, the whiskey producing countries are proud of that history that they have with whiskey, that if there were other, I think production methods that were allowed legally, which currently are not allowed, they would also then be, highly defined in terms of labeling and what, how you could sell that product. So, let's just say, these fairly common examples, I say common, but, articles about, speeding up a whiskey, some Silicon Valley, entrepreneur, this is his plan. He's going to make whiskey in 2 days instead of 20 years. The truth is, if somehow that was legal, which it currently is not, by the way, and he could sell it and label it as whiskey, which again, he cannot currently, the labeling would differentiate between the two different types of whiskey. It's the same as bourbon versus rye, American whiskey versus Japanese, Kentucky straight bourbon. These are all, categories of whiskey that are highly defined. If you don't meet certain requirements, you cannot label them as such. And so you cannot label a 20-year-old whiskey if you've produced it in 2 days, even if you think it tastes like a 20-year-old whiskey. And the truth is, there is no substitute for time. So, that's fine. You can make a whiskey quick. That means it's going to be cheap and people are going to have shots of it at a bar. It doesn't mean that it's going to sell on auction for £20,000 because there's only 10 of them in the world. And so, right. These products might become very commonplace. They might be, on the shelf at every retailer. They may be at everyone's home for daily consumption. But this category, this emerging category, will not compete and will not threaten what we currently, engage in, which is scarce products that are well aged, take time and expertise to make in more traditional styles. So, we're really not worried. As a whiskey consumer, it's quite exciting. I'm curious to see what they do. I've tried a few of them. They're not anywhere yet. But in terms of collectability and investability, they won't come close to what we currently operate in.
Okay, understood. Thank you. It's a different market, in other words.
Yeah.
Mark, I'll also ask some of the questions that came through on the registration forms for, just for the video and in case anyone looks at these Q&A. So first question was, in your views, in the maturing of the investment market and whether they want to understand your view on whether this ROI is unsustainable at the current levels. And are the new entrants creating some form of buoyancy or going to affect this?
Yeah, I mean, I think 500%, over the next 10 years will be absolutely difficult to sustain. I think, 15 to 20%, if you know what you're doing, will not be difficult, to achieve it all. I think that's very attainable. And I think we've proved it, last year, if you look at Rare 101, I mean, I guess index, if you will, dropped off by 5%, but, our specific holding jumped up by almost 16%. So as long as, you're an informed investor that knows what you're doing, much like with regards to any other investment, if you know what you're doing, I think, the returns are there. If you're simply just dipping your toe into the market and have no clue, I think you're going to be in trouble.
Got it. Thanks, Neil. Another question regarding our thoughts on the explosion of no age statement whiskies that are flooding the market and the impact on market prices overall. You've sort of answered that already, but I'd love for you guys to just underline your thoughts on that.
Yeah, sure. So the one thing I would say is that no age statement whiskies, or NAS, NAS as they're commonly referred to, have been around since the inception of whiskey. So it's not a new thing. What we have seen over the last 10 to 5 years is slightly more entrants, more releases that are no age statement whiskies. Whereas prior to the last 10 years, whiskey was yes, it was consumed in globally, but it wasn't in the same kind of demand as it is now. And so what's happened in the last 5 to 10 years, distilleries were under pressure. They were running out of the really old age stuff that they had in the warehouse because they never forecasted. It was near impossible to be able to accurately forecast this massive demand that has arisen over the last 5 years. And so in an effort to, to meet demand and to make sure that, consumers had their whiskey in their hand, drinking the brand, they reverted to, no age statement whiskeys. The 2 or 3 points I'd make about no age statement whiskeys is that, just because they don't disclose the age doesn't mean that, they aren't worth drinking, doesn't mean they aren't worth collecting, doesn't mean they aren't worth investing. But it does depend on the release and what's in the bottle. Generally a no age statement whiskey will be a bit younger. What is a bit younger? It's all relative, but usually between 5 and 10 years old. They're lighter on the wallet because of their age. There's generally standard releases, so these are not necessarily the things that in terms of a collector or an investor you want to be buying. And I don't see the rise or the increase in no age statement whiskies to threaten, again, the 20-year-old whiskies or the limited releases, etc. So, I'd also then just close by saying we've also, in my opinion, and from my experience, in the last year or two, we've seen a decrease in no age statement whiskies, because what the no age statement whiskies allowed the distilleries to do was buy it some time to further mature, some of their younger stock to get to 10 or 12, which is usually their flagship product, and get those back in the market. And we've seen the biggest distilleries in Scotland go from an age statement to a no age statement, which is where this question kind of speaks to now in the last little while actually reverting back to an age statement. Glenlivet, Glenfiddich, Glenmorangie, they can all be, they've all done this. Macallan as well. So no age statement whiskies are here to stay, but with that being said, they've always been here. They generally are not, they're not the top end scarce, 0.1% investment grade whiskies that we're after. With that being said, there are some no age statement Japanese whiskies that are absolutely exceptional drinking, highly coveted, and worth £20,000. So again, just because it doesn't have an age on it doesn't mean it's not valuable. Again, what's behind the label, what's inside the bottle, what are the intrinsics of the whiskey. So yeah, we're not worried about no age statement whiskey. Generally the stuff that is produced is for quick consumption, but there is some really cool stuff out there as well.
Brilliant, thanks Mark. I have another question from Mandisa Mitchell from the US, specifically regarding bottle versus cask investment, and you touched on that earlier in the presentation. Can you elaborate a little bit more on your perspective on bottles versus casks?
Sure. So I mean, I think again, obviously, a cask is quite a big undertaking. If you're buying a sherry butt, for example, you've got somewhere in the region of 600 liters in there. And the cask itself, it will be expensive, even if you've got new make in it, and you're probably looking at somewhere in the region of £5,000 to £10,000 if you're lucky, and that would be for an older cask, a refill cask, just to be filled with spirit. You've of course then got to wait 10 odd years to bottle it and to sell it. So liquidity side of things, it's absolutely more difficult to move a cask than it is to move a bottle. If you buy a bottle, you can sell it on auction very easily, and essentially get the full return or the market related price on it. On a cask, if you've got 500 liters of a particular product and you have no direct route to market, your only way again is sell it on a secondary market, on an auction, but you're not going to get top dollar for it. Ultimately, you need to be in the market, you need to be able to bottle it and to sell it to get the full returns on it. There are of course some great distilleries out there, the likes of Springbank, Macallan, etc. If you've got single casks of this and you've been sitting on it for 10 years, you're going to absolutely have made your money already. But I think going out into the market now and trying to pick up a top tier distillery cask, you're going to pay top dollar for it, and there's not going to be a lot of money to be made there, in my opinion. Again, perhaps I'm wrong, but I guess we'll see in the next 10 years. The reality is, a lot of the independent bottlers as well, they might be sitting on some of these casks, but it's not in their best interest to sell it on to anybody either. It's in their interest just to sit on them. So, I guess scarcity has definitely driven up the price of some of these casks recently. But again, to maximize return, you need a route to market. If you're sitting on 150 casks, best you have a very, very large business to move those on effectively.
And the one thing I'd add to that as well is that it's easier to invest in casks. I mean, you can Google buy whiskey cask, and you'll be able to buy them directly from several distilleries. Generally, newer distilleries trying to generate some revenue.
Flow,
yeah, exactly, for operational expenses. You might find some cask brokers that trade casks all the time, and you can do that. But buying bottles and looking at our existing portfolio and where we play, in terms of SVC and the types of bottles we acquire, these bottles are not, you cannot just recreate them. They're already tried and trusted. They already have a historical, trading history, and people want them. They are desirable now. Whereas if you have a cask, if it's from the right distillery, it's the right cask, it's probably going to be good. But is it going to be exceptional liquid at the end of the day? You have to create a label. You have to create a bottle. It's a different proposition in terms of investing in casks than investing in whiskey. It's like, instead of investing in the Ferrari, you're investing in the engine factory. It's that type of thing. It's pre the actual good. And so, when it comes to these bottles, let's just say that, Yamazaki 35-year-old, well, there's only a few left in circulation. Well, whereas if you just have a cask, well, how many are there? How many were produced? How old is it? How good is the quality? Do you need to re-rack it? Is the wood still giving good flavor? It's a very different set of fundamentals and considerations. It's a very different value proposition, casks versus bottles.
Thanks. I love that.
Eric, we seem to just have lost you. Eric, can you hear us?
Got me nose?
Yes, I
Hello.
can. Go ahead.
Okay, great. I've got one last question from Karim Rafa, and then I guess we can wrap. Specifically regarding our liquidation rules and fund structure.
Liquidation rules and
Can you elaborate on that? And the fund structure and.
Okay. We touched a little bit on how it's the fund is structured already. But it's essentially a registered PTE limited company in Singapore. There are obviously two sets of shareholders. There's ordinary shareholders, myself, Mark, Marek, and Gary, and then there's the pref shareholders, which would be the clients. We've currently got about 19 clients in the fund in total. If the fund was to go bang up, and again, I guess that's to assume all whiskey was to be worth absolutely nothing tomorrow. I guess this is worst case scenario. We would, I guess, split the whiskey evenly amongst the existing investors, and you would have a very large packet of whiskey arrive on your doorstep. So I guess that's worst case scenario. We obviously don't anticipate that to happen, but who knows? From a liquidation point of view, I guess I already touched on that. What was the other part of the question?
The structure.
The structure and liquidation. Yeah. So I guess if you had to exit, and perhaps from a liquidation point of view, we can speak about exiting. If you had to exit the fund, we would obviously sell up a portion of whiskey and pay you out your money. There is obviously a required time period. We would like you to invest for a minimum of 4 years. If you withdraw your money before the 4 years, you would pay a 5% disinvestment fee, which we just doesn't really make financial sense to buy into whiskey and then to sell it out 6 months later. Ideally, the bottles we're buying into, we want to hold for a minimum of 4 years to maximize the returns. So we put that in place to try and discourage people from pulling their money out early. I hope that kind of answers the question.
Brilliant. Thanks, Neil. Yeah, I think that answers the question. Great. That's all the questions we got from the online registration form. So if there's not any other questions, then we can wrap up.
Cool.
Yeah, sounds good.
Great. Thank you, everyone. Thank you, Thomas, for joining as well.
Absolutely. Thanks, guys.
Thanks, Thomas.
All right.
Thank you very much.
Bye.
If you'd like more information, just get hold of us. Cheers.
Ciao.
I will. Thank you.